Good morning, ladies and gentlemen. It's Butch Shorak, Options University. This is Market Forecast, Monday, June 3rd, 2013. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit. Exactly what kind of a week did we have during the last week? Well, as you can see, if we look at the Dow, the NASDAQ, and the S&P 500, also checking out the Russell 2000, if we look at the change for the week, we see all negative numbers, and we see percentage changes anywhere right around 1%. Russell ended up exactly where it was at the beginning of the week, so we had a bit of a pullback. But look at these year-to-date numbers as we look at the returns on our different indexes. 15.3% for the year, 14.5% for the NASDAQ, 14.3% for the S&P, and almost 16% for the Russell 2000. So what we see is we see a pace that is impossible to keep up, and we of course do expect and will have certain pullbacks because we've got a healthy year's worth of returns there, and here we are June 1st. And moving forward into the summer months. So the old rule, go away in May, still hasn't applied, as we saw that when we look at the year-to-date, we certainly have been in a nice, hefty, bullish move out of the market. Let's take a look and see what kind of economic announcements we have coming in the next week. As we look at them, we see that on Monday we have PMI, manufacturing index, certainly be able to move the market. ISM coming out on Monday. So Monday, June 3rd, is the day of important numbers coming for the market. Motor vehicle sales come out before the market on Tuesday. Got international trade, which probably won't move the market all that much. Looking at Wednesday, we've got, these are all the reports to see what happened during the last month. ADP employment report, certainly a big number for us. Productivity and costs, factory orders, ISM non-manufacturing index coming out on Wednesday. So big numbers coming out for the overall market and could influence where the market's going. Are we due for a pullback? You bet we are. Are we going to have it? Well, we've been talking about the air being thin up here for a while. We're approaching very close to that 30-day moving average, which many times we'll bounce off of. Thursday morning, and we have what we have every Thursday morning, jobless claims. And then, of course, looking at Friday where we see the monthly employment numbers coming out for the month of May, and we see consumer credit, which probably will have no move on the market whatsoever. Let's take a look at the SPX and see exactly what it did during the last basically 3 months. Looking at the chart, we see that we are in a definite uptrend. We have our 30-day moving average moving up here. So we see that the 30-day is above the 50-day, which is well above the 200-day moving average. So we certainly have pulled back to this 30-day moving average before, and we see that that trend line that was drawn from before is sitting right around that 50-day. So we can expect that on Monday morning we may see us go down and touch this area down at 1625, where the current 30-day moving average, and we'll see whether we pull back to the 50-day back around 1600, and then we'll see whether we continue in this uptrend. But we still are an uptrend. We're having a down cycle in this uptrend. So overall trend is up, and our cycle is down, which we really covered during this last week. In fact, let's take a closer look at the last week, and we see that on Monday we kind of ended up with a reversal signal. We popped up a little bit, got a lower high, this low being higher than that high, this high being lower than that high. And so we see that we then pulled back with the big pullback on Friday afternoon as we headed toward that 1625 number, which is our 30-day moving average. Let's see what the Dow did compared to the S&P. The S&P down 1.43% and 23 points on Friday. Big down day for the S&P. So let's go ahead and take a look at that 1-month chart, and we see there it is. We're looking at the Dow, and as we look at the Dow, we see that the Dow also is in an uptrend. Looks very similar to the S&P. Big down day on Friday, headed for that 30-day moving average, well above 15,000. Where are we headed for? 16,000? We'll see. Double top right there on the Dow. We'll see whether we go up and try to get a triple top. Had quite a bit of volume on Friday as we sold off. So we'll see whether we get our bounce as we go into this next week. All right, looking at the NASDAQ, let's take a look at the NASDAQ, and we see that it certainly has had a wonderful run since April 15th, as it just kept heading up. And then kind of this last week, it kind of went sideways with it closing in very near the low. So for the overall week, where'd the NASDAQ go? No place. No big sell-off, just no place as far as the week went. All right, then let's take a look at the Russell 2000, our biggest gainer out there for the year, and we see that it also didn't have it to hit the lows from last week, as it's still showing a good deal of strength. Still quite a way away from that 30-day moving average, as the Russell 2000 showing a lot of strength as far as the indexes are concerned. We would expect a pop out of the VIX when we see that much of a pullback, and that's exactly what we got on Friday, as we saw this thing come up to about 16. So we popped out of our previous trading range. This was what we saw around April 15th. We could very easily see a repeat of that. Head on up, get a little more fear in the market, and then if it does what everybody expects it to do, since everybody is so bullish, we'll see it come back down, head for those lower numbers. So look for somewhere around 1750 out of the VIX if you like trading the VIX as one of your trading vehicles. Let's take a look at the bond market and see what happened with the bond market. Well, the stock market pulled back. Bonds should be pulling up, right? Not the case, as we're seeing a definite sell-off in the bonds, and we had what could potentially be a hammer signal and a reversal signal on Friday, but the bonds have come down a long way from where they once were. That bullish market in the bonds doesn't seem to be holding all that well. Take a look at gold. We see that gold did absolutely nothing for the week, basically finished where it started, and showed us certainly no volume whatsoever, very low volume on gold. Now let's take a look and see what kind of volume we had in the overall market as we looked at last week. We'll take a look at the spider and look at the volume on it, and we see, look at this, what we had. Much higher volume during the last week, and certainly big volume on Friday as we had our sell-off. Again, here's our 30-day moving average. Here's our 50-day moving average. One might expect that we're going to pull back to that 60-day moving average just as we did in April. Get a bounce off that and then determine where we're going for the rest of the summer. Looking at the financials, XLF is the ETF that we look at for that, and we see that the XLF is still up there in blue sky, really showing good relative strength. Again, basically ended where it started the week, but quite a distance still from that 30-day moving average, showing no great fear in the financial stocks as our ETF XLF showing good strength. Now we'll take a look at oil and see what's happening on that front, and we see that oil sold off for the week and is headed down, actually broke through some of its previous support there, so showing a little weakness in oil as we see it pulling back. So with that, that's the week that was, and for those of you that are not gold members, you might want to go look for more free videos from Options University at www.optionsuniversity.com/free gold. For those of you that are gold members, stick around and we'll talk about the effects on these stocks. These are our forerunners for the market and have been our forerunners for the last couple years, and we'll see what they did as we had this pullback in the market as we looked at this week, and basically ended up the week at about the same place that we started it. So with that thought, this is Butch Shorak, Options University, Monday, June 3rd, 2013. Ladies and gentlemen, thank you for being here. Options University appreciates you.